Module 1, The World of Accounting. Solving for assets. To calculate the value of assets, we can use the accounting equation. Assets equals liabilities plus equity. For example, say we know that equity is $425,000 and liabilities are $228,000. We can plug those values into the equation. Assets equals $228,000 plus $425,000. Therefore, the value of the assets is $653,000. Solving for owner's equity. To determine the amount of owner's equity, we can use the accounting equation. Owner's equity equals assets minus liabilities. Let's say we know that as of July 31st of the current year, a company's assets and liabilities are as follows. Assets. Cash, $17,500. Accounts receivable, $9,125. Supplies, $900. Equipment, $18,000. Total assets are thus $45,525. Liabilities. Accounts payable, $12,300. So, the company's total liabilities are $12,300. Using the accounting equation, we can calculate the owner's equity as follows. Owner's equity equals $45,525 minus $12,300. So, owner's equity equals $33,225. Therefore, as of July 31st of the current year, the amount of the owner's equity is $33,225. Government bonds. Government bonds, also known as sovereign bonds, are debt securities issued by a national government to finance its spending or to manage its debt. These bonds are typically considered low-risk investments because of the full faith and credit of the issuing government back them. This means the government guarantees to pay the bondholders the interest and principal. Government bonds are usually issued in large denominations and have long maturities, ranging from several months to decades. They pay a fixed interest rate to bondholders, known as the coupon rate, usually paid semi-annually. The market value of government bonds fluctuates based on changes in interest rates and other market conditions. Investors, including individuals, corporations, and other governments, purchase government bonds to earn a low-risk return on their investment, diversify their portfolio, or provide a haven for their money during market uncertainty. Government bonds are often considered a benchmark for other fixed-income investments, and their yields are closely watched to indicate the economy's health. Solving for revenue. Let's say a company billed a client for $25,000 of consulting work completed. This means the accounts receivable asset increased by $25,000 and the revenue account increased by $25,000. This is because when the consulting work is completed and the invoice is issued, it is considered revenue earned by the company. Therefore, the company would record a debit to accounts receivable for $25,000 to recognize the amount owed by the client and a credit to revenue for $25,000 to recognize the earned revenue. This results in an increase of $25,000 to both accounts receivable and revenue. External users of accounting. External users of accounting are individuals or entities outside of a company who use the financial information provided by the company for various purposes. These external users do not have access to the company's internal financial information and rely on the financial statements and reports provided by the company to make decisions or judgments about the company's financial health and performance. Some examples of external users of accounting include: investors and shareholders are individuals or entities who have invested in a company's stock or ownership shares. They use financial statements and reports to assess the company's financial performance and determine the potential return on their investment. Creditors are individuals or entities who have lent money to the company and use financial statements to assess the company's ability to repay its debts. Regulators are government agencies responsible for overseeing companies in specific industries, such as banking or insurance. They use financial statements to ensure companies comply with regulations and assess their financial stability. Customers and suppliers may use financial statements to assess the financial health of a company and its ability to continue doing business. Analysts and researchers. Financial analysts and researchers use financial statements and reports to evaluate companies and industries, identify trends, and make projections about future performance. Overall, external users of accounting rely on the accuracy and transparency of financial information companies provide to make informed decisions and judgments about their relationships with the company. Purchase of land. Say a company is considering the purchase of a parcel of land that the seller acquired for $65,000. Also assume the land is offered for sale at $110,000, is assessed for tax purposes at $75,000, is recognized by the purchaser as quickly being worth $125,000, and is purchased for $107,000. In this case, the land should be recorded in the purchaser's books at its purchase price of $107,000. This is because the purchase price is the amount paid by the purchaser to acquire the land and represents the asset's cost. The fact that the seller acquired the land for $65,000, that it is offered for sale at $110,000, and that it is assessed for tax purposes at $75,000 is all irrelevant to the purchaser's accounting treatment of the land. Similarly, the purchaser's estimate of the land's value at $125,000 is not relevant to the accounting treatment of the transaction. The appropriate amount is the actual purchase price of $107,000. When the purchaser records the land, it would debit land for $107,000 and credit cash, or another payment method, for $107,000 to reflect the transaction. The land would be recorded as a long-term asset on the balance sheet at its cost of $107,000. Accounts receivable. Accounts receivable refer to the amount of money a business is entitled to receive from its customers who have promised to pay for goods or services later. In other words, accounts receivable represent a company's short-term credit that it extends to its customers. When a business sells goods or provides services on credit, it generates an account receivable, essentially a promise from the customer to pay for those goods or services at a future date. The credit terms are typically agreed upon in advance and may include the payment due date, the interest rate, if any, and any penalties for late payment. Accounts receivable are a vital part of a company's assets as they represent potential cash inflows that will be received in the future. However, they also come with some risks, as there is always a chance that customers may need to pay their bills on time or at all. Businesses must manage their accounts receivable carefully to ensure they collect timely payments and minimize the risk of bad debts. This involves monitoring customer payments, following up on overdue accounts, and establishing credit policies and procedures that help to minimize non-payment risk.